I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Australian farmers could harvest fewer wheat acres next season. Rabobank said that wheat plantings could total just 24.2 million acres in the 2026 and 27 season. That would be down 20% from the last season and below the 5-year average. The firm said persistently low prices, dry weather, and elevated input costs are the main driver for the shift. If realized, that can mean a 41% drop in production. It could also lead to the country harvesting its smallest crop in about 7 years. So where are those acres going? Canola seedings are expected to get a bump. Western Australian canola acreage could grow to a record 5.7 million acres. That is according to a survey from the Grain Industry Association of Western Australia. Additionally, canola acreage could represent a record share of crop acres. Planting of other crops such as canola, barley, and pulses are expected to offer better returns for Australian farmers than wheat. Currently, the crop is being planted and won't be harvested until this fall and winter. Biomass biodiesel production continued to rebound in April amid renewed demand for biofuels. Data from the Environmental Protection Agency showed that combined biodiesel and renewable diesel output totaled 400 million gallons. That was up 7% from the previous month and 27% higher than April of 2025. That was also the highest monthly volume since the record set in December of 2024. Production for the first 4 months of the year is running 22% ahead of last year. The sharp rebound was due to the EPA finalizing biofuel blending mandates in late March. Biodiesel facilities have been reportedly active in their soybean oil procurement efforts. Meanwhile, renewable diesel operators have been picking up waste oils such as used cooking oil and beef tallow where available. Biofuel producers have stepped up imports of canola oil this year, though imports of UCO and beef tallow are off to a slower start. Australian beef is also in the news, but it could reshape some dynamics in the U.S. Bloomberg reported that China warned that Australia was currently sitting at 80% of its annual quota of 205,000 tons of beef shipments. Once that hits, imports will be subject to a 55% tariff, and the quota could be hit as early as mid-June. That is expected to drive more beef to the U.S. U.S. imports have already been running at a record pace. Shipments through the first quarter are up 15% from the previous year. The U.S. has had to import more beef due to tightening lean beef supplies. Domestic beef cow slaughter is running about 16% lower than last year and 31% below the 3-year average. Additionally, steers have been grading higher. That combination of lower beef cow slaughter and higher graded carcasses have tightened up lean beef supplies. So if China's beef tariffs shift global beef flows to the U.S., it will likely help meet consumer demand rather than flood the market. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.